Hello and welcome to the Wall Street Petting Zoo podcast. This week at the Zoo is a weekly podcast on news in the stock market, and we also talk about a few stock picks and a few not so good picks. My name is Robert Coburn, and my partner Christopher Smith is out this week, but he will be returning next week, or should I say next decade? It was a short trading week this week because of the stock market observing Christmas, with the stock market being closed on Christmas Day and a short trading day on Christmas Eve. China's finance ministry announced on Sunday it will be lowering the import tariffs on over 800 products starting Jan 1 of 2020. The list includes frozen pork, which was cut from 12% to 8%, avocados, which was cut from 30% to 7%. Roughly 700 of the 800 plus products were taxed at temporary rates in 2019. This should be a huge boon for pig farmers, as China has a huge supply gap after a severe pig disease crippled its pork supply. Is it a coincidence that this is the year of the pig? It also noted that tariffs on some asthma and diabetes medications would be set to zero. With the positive news that came out on Sunday, the stock market jumped on Monday, including Boeing, on the news that they had ejected CEO Dennis Muilenburg. This comes on the report from last week that the 737 MAX jets would be pausing production in January. Tuesday marked the beginning of the Santa Claus rally period. This is the final 5 days of trading of the year and the first 2 days of trading in the new year. During this period, stocks typically have non-justified gains. In other words, there is no direct catalyst that causes the stocks to rise. The S&P 500 has averaged a 1.5% gain since 1950 during this period. Thursday, the Nasdaq crossed the 9,000 mark for the first time after Amazon announced it had a record holiday shopping season, with Amazon almost gaining 5%. As expected, trading volume was thin on Thursday due to the majority of stock traders and investors spending time away with their families. It's something we should all do. There's more to life than money. Good thing there are apps like Webull that allow you to make trades from your mobile device. Referral link is in the description below. We also got news that the Chinese Commerce Ministry spokesman said that they are very close to signing the Phase 1 trade deal with the U.S., and Trump announced that there will be a signing ceremony with the Chinese leader Xi Jinping. And that's it for the news this week. Let's jump into the stocks I was looking at this week. After Boeing jumped on the news that it ousted its current CEO after the pausing of 737 MAX production, the stock actually ended the week lower from where it started. I will continue to watch the stock, as it should continue to inch lower unless they make a major shakeup by hiring a high-profile CEO or resume production of the 737 MAX. I'm still looking at the 300 mark for an entry point, but if there is a sharp decline in the coming weeks, I may take advantage of any large dips. Netflix is starting to taper off from its rally in mid-December. 315 will be my entry point for Netflix. Chris was looking at Baidu, which saw a small decline. I don't think the decline is of anything significant. I would still suggest that this is a buy. Zoomies also saw a small bump in its price. Zoomies is considered a strong buy according to Zacks ranks. Snap was the last stock that Chris was looking at. He said that they also saw a small price jump as well. Snap is actually up 190% this year. However, it is down from 13% from July. Definitely a stock that is possibly poised for a breakout in 2020. I feel like 2019 was already the breakout this year. But there are some analysts that are saying that as long as growth is seen as better value than profit, then Snap is actually a good buy. As for the stocks I will be watching the rest of this Santa Claus rally, Activision Blizzard is one stock I have been keeping my eye on. It has slowly been climbing in early December, and if it pulls back down to the 58 mark, I will be buying. Bank of America is another stock I have been keeping my eye on, as it hasn't gone below the 30 mark since October, after being pretty stagnant majority of the year. I will be looking for 32 as the entry mark for buying. Ford is what I'm hoping will be my dark horse stock. It has definitely taken a beating since the beginning of the decade. It has spent the last year restructuring and focusing on the global market. It is up 17% year to date. However, its market share has been dwindling in the U.S., and vehicle sales in China have been falling. If the U.S.-China trade war is resolved and Ford starts to manage their debt more efficiently, this may cause the stock to get back to 12. That's when I'll be selling. And I'd like to thank everyone for joining me this week at the zoo. If you want to help support the podcast and you don't already have a Webull account, click on the referral link in the description below. We'd also greatly appreciate if you shared the podcast with your friends on social media. If there's anything you want us to cover or any stocks you want us to take a look at, leave a comment down below. You can also find us on Podbean, and don't forget to follow us on Twitter at WSPZoo. Hope you all had a wonderful 2019, and we will see you next year at the zoo.